Do you want to know why you should invest in fixed income? Then watch this video till the end. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. How you doing today? I hope you are doing fantastic. I'm doing marvelous, marvelous, marvelous. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. Today, I want to have a conversation with you around fixed income. When I'm talking about fixed income, what am I talking about really here? I'm talking about bonds, U.S. Treasury bills, U.S. Treasury notes. Any security that provides fixed income, that's the whole thing is in the word, fixed income. It could be interest income every month, every quarter, every 6 months, every year. It doesn't matter as long as you're getting some ka-ching coming into your bank account. That's all that matters. So I believe that fixed income plays an essential role in an investor's portfolio. And I don't really care about whether you are 20 years old or 40 years old or 60 years old. You need to have fixed income to sort of balance your portfolio out. Now let's talk about the potential benefits of fixed income investments and whether they're right for you. But before I really even get into that, let me ask you a question. Have you thought about your objectives? What are your financial objectives? When we talk about money, whether it is investing in stocks or bonds or ETFs, exchange traded funds or real estate or other forms of securities out there, you got to ask yourself your objective. Is your goal to diversify your investments, save for the future, receive dependable income, preserve principal, or minimize taxes? You got to know, you got to have an idea of what you're going after. And once you have that idea, you would realize that fixed income investments could be a way to reach your goals. They will provide the stability when the market is having a correction. They will provide the stability when the market is going through an upswing. The bottom line here is that you need to diversify, and bonds and bonds and bond funds, among others, are a great way to smooth out your portfolio, to optimize your portfolio's beta and alpha over time. So let's talk about the benefits to investors. So as an investor in fixed income, what kind of benefits can you expect? Adding bonds to a stock portfolio may help to smooth out the highs and lows. I already said that. So diversification. Bonds are designed to preserve capital and are therefore great for saving for a future expense. So let's say you want to buy a big ticket item such as a house, and you're trying to save from that, and you're trying to save for the down payment in a few years from now. So you can buy a bonds. Of course, please don't buy a bonds from a shaky company. You want to buy a bond from a stable company, Microsoft, Apple, the Apples of the world, companies that have income, they have money. A third benefit to investors is that many bonds have preferential tax treatment where coupon payments are exempt from federal and potentially state income taxes. Right? So if you buy munis, aka municipal bonds, or U.S. Treasury notes or U.S. Treasury bills, you could be exempt from coupon payments. Let's start with the basic of fixed income, because I've been talking about the benefits. That's kind of cool. But what are the basics? Very quickly, fixed income investments get their name because they are usually designed to generate a specific, aka fixed, right, level of interest income. So common fixed income investments, I've said it recently, I've just said it here. You have treasury bonds. You also have something called government and agency bond. This is very important. They use this for a lot of things. They use this for projects. They use it for, like, if they want to build a new highway, for instance, they will use that, and they will reimburse bondholders through tolls and other fees. You also have municipal bonds, aka munis. You have corporate bonds and mortgage-backed securities, MBS, as well as CDs, so certificates of deposit, and preferred stocks or securities. So before you think about investing in fixed income, you got to understand the different types of securities. When we talk about bonds, what are we really talking about here? I give you a series of lists. I'm now going to delve deeper. I want to explain to you what we're talking about here. So individual bonds. So bonds typically pay a set schedule of fixed interest payments, and they promise to return your money on a specific maturity date. So your money is the principal. The money you invest in a bond is the principal amount. So the bonds are issued by a variety of entities. I'm talking here about the United States Treasury, government agencies, corporations, and municipalities. So a reputable broker gives you access to over 60,000, 70,000, or 100,000 bonds from more than 200 dealers or 300 dealers. What I'm trying to say is you want to choose a reputable broker that gives you that has network in the industry, that has the right network, the breadth and the depth of the network when it comes to bond offering. When we talk about bond funds and exchange traded funds, the ETFs. So bond mutual funds and bond ETFs are professionally managed investment products made up of a diversified mix of underlying securities. So many have low investment minimums. So you can get those through a great broker, and make sure that you ask for no load, no transaction fee bond funds. What about certificate of deposits? So those are bank deposits that pay a stated amount of interest for a specified period of time, and they promise to return your money on a specific date. So CDs, and that's a great thing, they are insured by the FDIC. FDIC stands for the Federal Deposit Insurance Corporation, and this is kind of cool, and this provides an added level of safety. The CDs are insured up to $250,000, so $250,000, and you can find and manage high yield CDs through several reputable brokers on the internet. What about preferred stocks and securities? So preferred stocks and securities are a class of stock that must pay dividends or interest to preferred shareholders before dividends are paid to common stockholders. So they are issued by corporations and have attributes that are characteristics of both stocks and bonds. So you can talk to your broker, and if you do a research on the internet, you'll find any reputable broker who can give you access to new issue and secondary market preferred stocks and securities. What about managed accounts? So managed accounts, a managed account is a portfolio of individual securities that you own. So the securities are chosen and managed on a discretionary basis by an asset management firm. So you actually outsourcing the management of the account to an external party. So each professionally managed account followed a focused strategy within a specific asset class or investment class, and you would have to talk to your asset management firm by you want to specify to them the guidelines they need to follow when managing your account. And it is not uncommon for sophisticated investors, for a lot of investors for that matter, to send the asset manager a statement of investment policies. So in other words, you're trying to clarify how you want your money to be used, what kind of bonds you want the money to be buying, and that kind of stuff. I'll be right back. All right, it's don't go anywhere. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. If you love this content so far and love the clarity and quality of the show, please consider subscribing to our channel and turn on the notification bell. We just kind of release this kind of shows every single day, rain or shine. Comment below, share, and like. Let's take a closer look at the benefits of bond investing. Again, the premise of today's show is why invest in fixed income. And I want you to take a closer look with me at the benefits of bond investment, of fixed income investment. There are 4 key features to fixed income securities that make them desirable to investors. First, you have diversification, capital preservation, income generation, and potentially favorable tax treatment. Let me repeat them. Diversification, capital preservation, income generation, and potentially favorable tax treatment. So each feature provides a unique set of benefits that vary depending on the type of fixed income security. What is the benefits that we're talking about here in terms of diversification? So fixed income securities, specifically high credit quality bonds, those investment grade bonds, they can help smooth out the highs and lows in a stock portfolio. So that's because if you really think about it, stock and bond prices have historically tended to move independently and with different magnitudes at any given time. However, diversifying with bonds does not ensure a profit and does not protect against a loss in a declining market. You also have income generation. So fixed income securities are generally designed to provide a regular, stable, predictable stream of interest payments on set dates. So you want to keep in mind though that there is a risk that the issuer will not make good on the promise to pay interest income. So we have default risk there. So there are three common choices for generating income. So for individual bonds, the pros are that they offer you control over what type of income you can expect to receive and when. You have payment dates that can be staggered to help create more regular monthly income, and they can be laddered to help manage liquidity and interest rate risk. We have covered the topic of bond laddering in another movie, so please check that out and avail yourself of it so you can learn more about what I mean when I'm talking about bond laddering. So for the individual bonds, I've talked about the pros rather, and let's talk about the cons. So the cons are that when it comes to individual bonds, they require more involvement when it comes to research. You need to choose, you need to diversify and monitor. Normally, I don't see. Experts say that this is a disadvantage, but if you really think about it, when you invest in the bond market or the stock market for that matter, you are investing for your future or even your present. So it is worth it. It is worth that you take the steps to research, to choose, to diversify and monitor the bonds you put in your portfolio. This is what's going to put food on your table maybe in the next few years, in the next few decades. So it's worth it. What about so I'm just telling you that there are three ways, right? There are three ways to kind of generate income. So you have individual bonds, and then we have bond mutual funds and bond ETFs. So what are the pros of bond mutual funds and bond ETFs? The big advantage here, hands down, is that those bond mutual funds and bond ETFs are great for diversifying holdings. And diversification is key, folks. It's important. When stuff happens, that's when you're going to realize that, oh wow, I wish I were diversified. Many an investor have been wiped out because they did not allocate their resources, their holdings properly. So that's the pros. What about the cons? What about the disadvantages, the drawbacks of bond mutual funds and bond ETFs? They have income distributions that can fluctuate. Generally, they have no stated maturity date, so the shares might be sold to get back the principal. And they can have a potential loss of principal if they are worth less than they were when you bought them. And let's talk now about, I'm talking about the third benefits of fixed income investing, capital preservation. Remember, the first two were diversification and income generation. Now let's move on to the third, capital preservation. Fixed income securities are ideal when preservation of capital is a priority. Specifically with bonds, principal is usually returned at a set maturity date. So higher quality fixed income investments like treasuries and CDs, they have the best potential for protecting capital. Though preserving capital is a key feature of fixed income securities, there is still the risk, and you got to be aware of that. Don't think this is like you're not getting any free lunch. There's no free lunch here. If you're an investor, you are carrying a bit of risk. So you have to remember that there is still the risk that the issuer of the bond will not make good on paying back the principal. That's what experts called credit risk. There is a risk that you will not get your money back as a bond investor. Let me talk to you now about the fourth benefit. So again, folks, the benefits of why you should invest in fixed income. There are four main benefits: diversification, income generation, capital preservation, and tax exemption. Let's talk about that. Let's talk about tax exemptions. So some fixed income securities have preferential tax treatment. In other words, coupon payments may be exempt from federal and state income taxes. You have to keep in mind, it's very important, that potential tax advantages are generally factored into the price of any bond and therefore its yield. Also, tax exempt bond income may be subject to the alternative minimum tax, the AMT, that you see on your 1040, and capital gains are subject to federal and sometimes state and local taxes. So you want to reach out to a reputable broker who can help you, who can actually recommend consulting a qualified tax advisor for specific individuals' tax advice. In other words, you're trying to reach out to an expert, and this person can be a CPA, a certified public accountant, or an EA, an enrolled agent, or any type of financial advisor who can help you understand and take actions on your specified tax situation. Tax treatment is not the same for all types of bonds. Very important. For example, municipal bonds, they may have the greatest potential, the greatest potential tax benefit because their interest payments are usually exempt from federal income and are potentially exempt from state income taxes for investors buying bonds issued in their home state. So, for instance, if you are a New Yorker and you buy a muni from New York, if you buy New York City bonds like a muni like that, you're not paying taxes at the federal level and at the state level. Isn't that beautiful? So the 3% or 4% they're giving you, that's just free money. That's just free ka-ching going straight into your bank account, untaxed. What about Treasury securities? Treasury securities and some federal agency bonds, they pay interest that is generally exempt from state income taxes. Bond funds and bond ETFs that invest in securities whose interest is exempt from income taxes, like munis and treasuries, generally pay interest that is exempt from income taxes, just like the individual bonds they own. So that's really good to know. All right, folks. Thank you so much for listening to today's conversation. And I will see you next time. And before then, please remember, stay marvelous.